and welcome back to another Anchorage Digital live stream. My name is Julian Pierce, Director of Prime Sales and self-anointed Head of Hype here at Anchorage Digital, and I'm going to be your host for the next 40 minutes or so. Before we jump into introductions, let me quickly set the stage. We're all aware here that Hyperliquid has dominated mindshare in crypto for the past year or so, and is drawing serious attention from traditional finance institutions, both looking to allocate to Hype, as well as using the DEX for perps trading. The numbers really tell the story here. Hype is up around 160% year to date and owns about 70% of on-chain perps market share. And then here at Anchorage Digital, Hype custody volume has grown 300% month over month in May, with Hype trading volume nearly tripling from Q1 to Q2. Today, we're not necessarily here to rehash the conversation around price action and trading volume. What we really want to get into is what's next. Hyperliquid's evolution from a leading on-chain perps venue into a full institutional ecosystem that, as Jeff would say, is here to house the future of finance. So we're going to do that in three specific ways. One, firms building products that give institutions access to Hype and the ecosystem. Number two, the Hyperliquid specific ways in which you can put your Hype to work. And then three, the infrastructure that makes it possible for these institutions. So with that, let's get into it and start with a quick round of introductions. Why don't we do Hyunsu, Kris, Ryan, and David? Could you each start with a brief intro?
Yeah, thanks, Julian, and appreciate the Anchorage team for having all of us. My name is Hyunsu Jung. I'm the CEO of Hyperion DeFi. We're the first public company building directly on the Hyperliquid ecosystem, launched back in June of 2025, and we're just really excited and in awe of everything that Hyperliquid and the ecosystem have achieved over the past couple of years.
Kris?
Yeah, my name is Kris, or Omnia online, and I'm the co-CEO and co-founder of Kinetiq. We're the largest liquid staking protocol on Hyperliquid with 85% market share and third largest LST globally. And yeah, we've continued to build several other things that I'm happy to chat about shortly, but that's me in a nutshell.
Amazing. I'm Ryan Rasmussen. I'm the head of research at Bitwise Asset Management. We launched one of the first and largest Hyperliquid spot ETFs and are also really excited about what's happening in the space. Excited to be here with you all and talk about Hyperliquid today.
Awesome. I guess it's my turn. I'm David Lawant. I'm head of research at Anchorage. Anchorage is obviously one of the leading crypto institutional infrastructure providers. We engage with Hyperliquid and the Hyperliquid ecosystem in many different ways that we can cover throughout the call. Very excited for the conversation.
Awesome. Appreciate the intro, guys. I think we're uniquely positioned to talk about what we're hearing from an institutional client base, given we have a bank prime broker, an ETF issuer, as well as a treasury companies. So let's start at a 30,000 foot level and just talk about what we're hearing from our clients. David, what are the conversations that we're having at Anchorage Digital?
Yeah, of course. I would say maybe starting with our global markets clients, and it's very interesting to see that Hype became one of the leading assets in terms of activity at our desk. This is something that I have seen across the broader crypto trading ecosystem as well over the past, let's say, 12 to 18 months. If you look at a typical crypto institutional trading desk, you would have BTC as the most traded asset, and then ETH and Sol, and then everything would fall way behind. Today, Hyperliquid is very, I would say more often than not, the second most traded asset in a lot of these institutional trading desks. This include for us as well. We announced that we saw trading volumes, Hyperliquid trading volumes in our platform grow 300% in May. A lot of that has been by volume. A lot of that has been driven by debt activity, ETF activity. I'm very excited that we can talk a lot about these things. Perhaps just to give a view that is more up to date. Right now in June, of course, the market environment has started to get a little tougher. Of course, Hyperliquid is still one of the most traded assets at our desk. The one thing that I would say we have seen more recently, though, is that our flow started to become a little bit more sell side tilted. We still see a lot of buy activity, but given the current market conditions, we're starting to see some of the folks take profits here or there, but still at I would say pretty limited amount. Overall, Hype, I would say, is a consensus call among crypto institutional investors, and that spans across momentum-driven hedge funds, crypto VCs, asset managers, and a bunch of different client personas. I have a very hard time finding an institutional crypto investor that is negative on Hype. Not only Hype the asset, but also Hyperliquid at the as the ecosystem. And just to finish this, I don't spend too much time here, but in terms of looking forward, one thing that I'm very interested in is that we might be on the verge of seeing the development of a Hype options market. Deribit just launched Hype options. I think they launched late last week, so still very early days. Let's see how this market will develop. I think right now open interest is in the tens of millions, so that's pretty low. Just for context, Bitcoin's open interest on Deribit is in the tens of billions range. ETH is probably in a couple of billions level of open interest. So still very early days for Hype options, but I'm very interested in seeing how this develop. This is one area of the market where we see activity on the OTC side. So it's very cool to see listed options. This is also nice to have data around volatility surfaces and all these things, and we can start to see a little bit more what the Hype options market is pricing.
And Ryan, you're uniquely positioned to have conversations not with just institutional investors, but also with wealth advisors that are talking to more retail clients. What are those conversations like? How do they differ from maybe what David just mentioned? And then Hyunsu, I'd love for you to jump in and talk about what you're seeing on the public market side.
Absolutely. So the launch of the Hyperliquid ETFs was a remarkable success by several different metrics. Most of the ETFs that have launched besides Bitcoin, Ethereum, and Solana have followed a similar trajectory that David mentioned he sees in terms of trading volume. They've come up significantly shorter in terms of flows, in terms of volumes, and in terms of adoption, which makes sense because they're smaller market cap assets. But Hyperliquid is really in a league of its own, and it's hitting above its above its power threshold here with Bitcoin, Ethereum, and Solana. We've already seen nearly 300 million of inflows since these launched earlier this year, not that long ago, which is a remarkable amount of inflows for any ETF, whether it's crypto or non-crypto. I think everyone got used to the several billions of inflows into things like Bitcoin, Ethereum ETFs that we saw when those launched. But 300 million is a really remarkable amount of capital flowing into an asset the size of Hyperliquid. I think that's been a contributor to the price action, particularly around the launch of the ETFs. And a lot of that capital has been sticky. At Bitwise, we spend a lot of time speaking with financial advisors and institutional allocators and hedge funds. And I will say across the board, those that are more into crypto, because not all of those customer types are deeply into crypto, but those that are familiar with Hyperliquid. They're excited about Hyperliquid. They see the value proposition. And a lot of them are starting to make allocations, maybe not in all their client accounts, but definitely in their personal accounts. They're owning Hyperliquid. And so I think, what we hear them talk about when we have these conversations as to why they're excited about Hyperliquid, because crypto's existed for this long period of time where you really haven't had these ecosystems that have done a great job of telling the story of here is why this is disruptive technology. Here's how that activity really shows up in terms of revenue. And here's how that revenue and cash flow is passed on to token holders. And Hyperliquid is just such a clear picture of that story. And you can see it reflected in buybacks. You can see it reflected in token price. You can see it reflected in trading volumes that David mentioned and in terms of inflows into the ETFs. So I know that the folks we speak to are really excited. Hedge funds are taking positions as well, and even using Hyperliquid on top of owning the asset. They're using the platform, which is always a great sign of adoption. So we're really excited to see where these Hyperliquid ETFs can go, and I know that the clients we serve are excited about it as well.
Yeah, I think Ryan covered it well, but just to add on, we are seeing substantial institutional interest. I guess as a public equity vehicle, right, we are having a lot of the same conversations with hedge funds and allocators, many of those that are outside of the space. And so we're spending a lot of time on education, relaying the mechanics of Hyperliquid, right? Why the structural composition of the supply and demand is so different because of the buyback mechanism, value truly being brought back to the token holders, and you have these 30-minute to hour-long conversations, and you see the light bulbs start to go off. And it's trying to explain something that really hasn't existed, I think, in the entirety of the crypto space. And usually after that, it's like, okay, well, how do we access it? And so that's why I think we've seen a lot of the early success around the ETFs. For Hyperion DeFi specifically, we're focusing on providing access to the ecosystem in addition to just the value of hype, which we think also has prominent tailwinds just from the other things that we're seeing in the ecosystem. And for example, we announced a week ago our partnership with Blockdaemon, right, which is a very well-known infrastructure provider, but they're coming and using the Kinetiq Hyperion validator to support their forthcoming institutional staking products. So you're starting to see just the convergence of various entities around Hyperliquid, and it's still very early stages in terms of, I think, what it can actually provide to investors, not just in crypto, but much farther outside of the space.
Super helpful, guys. And I think we usually do keep it pretty high level in a sense of talking about what we're hearing from clients and investors allocating to hype, how they're thinking about using the platform and whatnot. Let's take it a step deeper. I think it's a good time to transition more in depth into Hyperion DeFi as well as the partnerships you have across the ecosystem. So Hyunsu, I know the way, we've been working together for almost, I think, over a year now. And the way that your approach is to digital asset treasury companies is much different than, simply a buy, hold, stake, and run a validator. You do quite a bit across the ecosystem. So could you dive into that a bit more and tell us about what your focus is and why?
Yeah, absolutely. So our focus has really been to enable repeatable DeFi innovation across a broad suite of products and services. And they are geared towards being built on Hyperliquid, and they reduce the barrier of access for institutions and increases the opportunity for us to build long-term success on chain. And so what does that mean? Obviously, validator operations, we were live within 8 days of the launch of Hyperion DeFi as a validator. And then we were the first public company to support HIP3 markets. And very, very quickly in January of 2026, we also announced deals with Hyperlend as well as Risk Finance to support borrowed lending infrastructure as well as vault infrastructure specific to HyperEVM. And the view there was that more institutional capital is going to start to come to Hyperliquid, and they would be looking for not just access to the hypercore side of perps and prediction markets and even spot, but also being able to borrow lend against tokenized assets, being able to use or operate vault strategies as well. And so the same things that we saw in previous ecosystems like Ethereum, like in Solana, we expect to happen again on Hyperliquid. And because it was so early in the ecosystem, we really took that opportunity to build things with the teams. And we are all entirely focused on positioning for that next wave of capital.
Kris, why don't you chime in here? I mean, you're the leading liquid staking protocol on Hyperliquid. You're working with a lot of institutions and retail investors from a liquid staking and DeFi perspective. What's your take on how the development of HyperEVM has been over the past year or so, and your guys' role in that?
Yeah, good question. I mean, Kinetiq has really been the glue of the entire Hyperliquid DeFi ecosystem. Ultimately, we make up the vast majority of its TVL, and not just at the base level, right? Like the K-Hype asset, for the most part, actually makes up the majority of other projects' TVL as well. So our influence has definitely dripped into pretty much every single component of Hyperliquid's general purpose DeFi ecosystem, from collateral for options to AMM liquidity to being a borrowable asset against some of the platforms that even Hyunsu mentioned, like Hyperlend, Felix, etc. So the reality is, Kinetiq has really become what we've set out to do 2 years ago, which was become the cornerstone for Hyperliquid DeFi. And even Kinetiq today, at the singular contract level, represents the single largest staking account on Hyperliquid by almost an order of magnitude to the next largest accounts. So it really does put into perspective how big of a protocol Kinetiq has actually become, which is very exciting. I think Hyperliquid has definitely set a new standard in terms of how economics at the protocol level should be shared with token holders, and we've adopted this ourselves with our KNTQ token. So yeah, I mean, there's been really interesting examples as to how this kind of new standard, as I mentioned, has bled into different ways that the HyperEVM ecosystem has formed, and particularly what we've done with our own economics. So yeah, that's my very high level take, but otherwise EVM good.
That's a great take. You mind diving in a bit more into the tokenomics around KNTQ? I find it super interesting what you guys are doing of accruing value to the token, similar to what Hyperliquid is doing. And I think that sort of ethos has bled into the ecosystem as a whole as well.
So yeah, of course, Kinetiq has silently become this very interesting compounding hype engine, essentially. And what the hell I mean by that is along the lines of, the protocol has a little bit over $1 billion in deposits in hype today. This represents a little bit over 16 million hype, which is definitely solid. It's like 1.6% of the total supply, and to my understanding, a little bit over 4% of the circulating supply. Most hype is staked natively or unstaked completely and just basically sitting on Hypercore freely. So this is with Kinetiq controlling the vast majority, again, of the liquid staking market, but still barely have scratched the surface in terms of total hype and where that can be deposited and utilized. There's an interesting flywheel between, all of this. You could call it like board hype, essentially, that's sitting there on Hypercore, whether it's staked or unstaked. And the opportunities that liquid staking the hype can actually create. One of them, obviously, is we heavily incentivize the usage of the Kinetiq protocol at all levels, whether it's our HIP-3 DEX or purely staking. Kinetiq charges a 10% rake on the staking rewards, and 70% of this is used to purchase KNTQ on the open market. And the vast majority of our revenues throughout all of our other business lines are used to purchase KNTQ in the open market. So we've really positioned KNTQ as essentially the purest form of hype beta that exists today, because truly there is nothing else on the market like it. We see this happen where even other traders will try to make the case out of purchasing other perp dexes or something like that, when really historically the trade has always been, if you're looking for beta of X, then buying X is really just like the best approach, right? Which is why we've seen other people try to rotate into other perp dexes, but really just sit in hype all in all. So Kinetiq has just sat there as a protocol that sits there, accumulates hype, and also builds various products in the ecosystem, whether it's across the liquid staking vertical or a HIP-3 offering or several front ends that we now offer via Hyperliquid's builder code offering. And we've essentially been able to tap into revenues that isn't really possible for, a more niche protocol, right? So we've become a little bit of a widespread offering overall across several different verticals, and this has allowed us to compound all of these earnings into KNTQ. So it's really interesting having designed all this and implemented it, but we obviously take complete inspiration from hype, and that's why I'm very inspired by how the way that they've approached their tokenomics has inspired the ecosystem to do similar things. So yeah, that's been the very high level. I'm happy to always touch on this more, but I think I've got it into a pretty good nutshell now.
Yeah, absolutely. That's a super interesting response. And I obviously want to dive deeper into markets and HIP-3 and HIP-4, but maybe before that, we can close out thoughts on liquid staking. Ryan, as an ETF issuer, how are you guys thinking about liquid staking? Is it something that you guys can incorporate that layer of liquidity from a staking perspective, or are there some more structural and regulatory hurdles in the way from a product perspective that you guys need to be concerned about?
That is a great question. So, what we saw in terms of evolution of crypto ETFs is that you had initially, of course, Bitcoin no staking, but with Ethereum ETFs also no staking initially, and then over time, the newer ETFs that have come to market, Solana ETFs, and of course, Hyperliquid ETFs have enabled staking from the get-go. A lot of the nuance there sits around liquidity requirements to facilitate redemptions for inflows and outflows out of the ETFs. Right now, majority of the Hyperliquid that's in our Hyperliquid ETF is staked. Now, liquid staking introduces an entirely probably new, perhaps primitive to how ETF mechanics work that I don't necessarily know regulators have found a way to wrap their arms around. It's not that it's off the table in the future. I actually think we're headed towards a world where all of these things converge into more sophisticated, more elegant, and better overall products in terms of cost, liquidity, effectiveness, etc. But right now, we're not using liquid staking directly via the ETF, and it's more of a structural regulatory hurdle, which I get sounds funny, especially when you think about liquid staking enables liquidity, and one of the hurdles is making sure that the ETF has enough liquidity to facilitate redemptions and creations or inflows and outflows. But I think we're headed there over the long term. And it's one of the things, that I think Hyperliquid is one of the reasons I think Hyperliquid is so exciting is because it's pushing the envelope around what we can do in traditional finance. It's essentially like the New York Stock Exchange and the CME and a bunch of other financial services if they were crypto native and blockchain based. And I think we're headed there eventually with things like ETFs as well.
100%. That's a great response. And let's actually take it a step deeper into, some of the crypto native or Hyperliquid native products and offerings that they have specifically around HIP3 and HIP4. I think, Kris, you're a great person to start with on this, given you've launched the HIP3 exchange markets. Why don't you tell us a bit more about that? Tell us a bit more about HIP4, and then, the rest of the group, please chime in.
Yeah, so HIP3 has been obviously really groundbreaking and ultimately led by TradeXYZ, which has become a huge behemoth in the HIP3 space. And markets ultimately has taken a very interesting approach. I'm sure everyone has seen what's happened with the whole USDH saga. And it's been quite interesting as the leading USDH deployer to do what we've done, which ultimately has been reduce the reliance on the actual stablecoin of choice, or what underlying asset ends up being most important to the Hyperliquid ecosystem, and actually just surface all the markets on our front ends. So what we care about the most by far is actual ownership of the end customer. And markets today pulls in anywhere between 200 to 300 new users, which has been very interesting. And this is both between our web app and front ends, and mobile front ends to be specific. And yeah, we also surface TradeXYZ markets, funny enough. So we have listed our own, and we list others as well. This is going through a pretty strong due diligence process around liquidity, oracle pricing, and ensuring that our traders who don't understand that the underlying markets are hyperliquid, aren't exposed to risks that they themselves should not be ultimately. So yeah, this has been our approach, which is basically be building on top of HIP3 rather than just solely acting as a HIP3 deployer. I've always looked at staking alone just extremely boring, so we did a lot more with staking, where, for example, we've created the institutional product where we service customers like Hyunsu over at Hyperion DeFi, who's here, and several other institutions as well, regulated market makers, to other DATs internationally, and so on and so forth. So the same thing applies to HIP3, right? I would find it very, very boring just sitting there as a HIP3 deployer. So ultimately, we've aimed to go farther out on the curve and capture the end user and actually control what it is that they see. So our front end features very, very different levels of sophistication and is ultimately guided around the level of the user that's coming into the platform, such as a simple offering, a more advanced offering, and so on and so forth. So yeah, I am obviously a very big fan of what's happened with HIP3. And I believe, at the Kinetiq and markets level, have been able to not only, capture that best, but also now be able to take it to a whole new subset of traders who previously wouldn't even know what Hyperliquid is, which is what it's all about. So I think everyone's happy in this very fortuitous cycle where TradeXYZ gets more flow and Kinetiq and markets makes 35 to 70 times the amount of money on the same exact trade. So very happy about that.
Love to see it. The one thing I want to highlight here is I think sometimes we, in more crypto native circles, fail to realize how much HIP3 has done to broadcast Hyperliquid's thesis to the broader market. I don't think I know too many of my hedge fund or TradFi friends who are not looking into certain Hyperliquid markets. Obviously, the two ones that probably took off the most were first the commodities markets, right? When we were having those, we're still having, right? But at the outbreak of the Middle Eastern tensions, Hype was basically the place where you could see a proxy for oil prices during the weekend. And then, of course, we had the pre-IPO equities where you could see proxies for SpaceX, pre-IPO price action, and things like that. The one thing I want to highlight here is that even though volumes are relatively small, if you compare to TradFi markets, which are obviously much bigger and much more developed, the informational component of those price action drivers was actually extremely useful, to the point that when you were seeing like the gap risk whenever those markets converge, they were actually pretty low. And I think this was a major driver and major push. Maybe Ryan can confirm that within a more TradFi audience, to the point that every once in a while you're going to see Hyperliquid prices on a Bloomberg report or things like that. I think nowadays it's way more common. And I would say, especially for folks who are deep into trading markets and analyzing price action, it's very hard for you to see someone who's not aware of what Hyperliquid is. And I would say even of something that is not following these prices every now and then. And then just the other thing I want to highlight is just also at a very high level, but HIP 4 is also very exciting, right? So of course, this entrance into binary options and potentially and prediction markets. But the one thing that I think we can even see in the future is that whether this will be used as a stepping stone for us to actually see full-fledged options trading on Hyperliquid at some point, right? In order to fulfill this mission of housing all of finance. So yeah, HIP 3, HIP 4, amazing drivers. I think these have been insanely helpful in order to drive the Hyperliquid narrative beyond the crypto native circles, which, as I mentioned, this is where Hyperliquid is already pretty much consensus. But now you have all this money and all these new personas starting to pay attention to the asset as well.
Yeah, I couldn't agree more. And just to back on what David said there, the reason that we saw financial advisors and institutional investors asking us about Hyperliquid at Bitwise was not because they saw the price of Hyperliquid and said, I need to buy this thing. It's because they saw oil prices being referenced from Hyperliquid over the weekend when traditional markets were shut, or it's because they saw CNBC and Bloomberg and other outlets leveraging Hyperliquid pre-IPO pricing leading up to the SpaceX IPO, right? These are the types of things that Wall Street really notices in terms of where markets are headed, where they should be paying attention to. And if all of their friends are doing it, as David mentioned, all these hedge funds and institutional allocators are looking at this, then they're doing it too. So I agree. It's kind of like poly market with regards to the 2024 elections. That was kind of a big bang moment where the information being provided by poly market related to the election showed the value of the underlying use case that prediction markets provide and the informative premium that they provide. And I think we're seeing the same thing with Hyperliquid over the past few months.
It's a really good point in talking about poly market, Kalshi, and sort of now these like all-in-one trading applications where someone could view Hyperliquid as sort of this all-in-one app. You know, one thing that I heard David talk about on his podcast, Inflection Point, everyone go check it out, was that you know, if you want to have some sort of allocation to Kalshi or to poly market, you need to be one of these institutional investors that has, you know, access to be on their cap tables. Whereas for Hyperliquid's prediction markets and binary options, the way to get an allocation into that is to be able to hold Hype. So, Hyunsu, what's your general thoughts there on HIP 3, HIP 4, and being able to get some sort of allocation based off of?
Yeah, it's so cool because I think everyone here said so many great things. Having gone through the process very closely of like building, launching markets, maintaining them, it is very critical for us to see right now that HIP 3 is changing a lot. Right? You have seen sunset and exit of a lot of the early teams, and it is, I think there is a lot of commentary about whether or not it's going to be a winner take all situation. We're also very close to the pulse on deployers and new conversations. And I'll just say, I wouldn't be surprised to see another wave of deployers with more refined products because we are still in the early innings of what HIP3 can actually become, right? Everything that's listed now is just very available public equities, tracking oil prices, gold, silver, but there's a lot more bespoke things that can be built that I think also bridges the gap towards real institutional access to HIP3. When we look on the HIP4 side, prediction market growth is also accelerating. You saw today with the announcement from Phantom launching their own prediction markets. It's really the hyper financialization of everything and being able to buy and sell belief, which we think is like the next wave of, you know, participants being able to get involved in financial markets, right? Whether they view it like that or not. And a lot of the commentary around Hyperliquid is really around the perp decks. Like, oh, it's worth this compared to Robinhood or Coinbase or IBKR or CME. but it's not including the value of what if it is also a proxy to Polymarket or Kalshi, in addition to the layer one premium, which Hyperion continues to emphasize. Like, there's a lot more to it than just the exchange. So our focus is continue to work with teams, find innovative ways to build all of that infrastructure and provide that access and upside to token holders, or sorry, equity holders of Hyperion DeFi, and by an extension of being having built the products ourselves.
It's a really good response and very thoughtful. One thing I do want to touch on is, obviously some of the infrastructure that Anchorage has developed in partnership with the ecosystem to allow firms to do more with their hype. One thing that was the ability to link your staking account at Anchorage Digital Bank or Anchorage Digital Singapore, our regulated custodial entities, to another self-custodial wallet trading on Hyperliquid to be able to obtain those trading fee discounts. So I think that just shows like one additional way in which we're taking it beyond the custody, staking, and trading perspective of it, and being able to allow folks to do more with their hype. So Hyperion, or Hyunsu, I know we've had conversations around this for Hyperion. What are your thoughts around the linking, staking, to trading?
Yeah, we've always been super impressed by how early and quickly Anchorage has been involved within Hyperliquid, right? Supporting Hypercore, HyperEVM. Link staking is one of the, I would say, components of the Hype Asset Use Service, which is a proprietary product built by Hyperion to provide institutions and other market makers, hedge funds, prop firms to trade on Hyperliquid, but be able to access the most efficient fee structure. And so being able to offer that through a custody structure like Anchorage is something that makes a lot of sense for these clients because they get both protection and improved access to Hyperliquid. And in addition to our work with Anchorage on that, we've also been able to build more unique structures with teams like Hyperlend, where you're able to utilize natively staked Hype that's in custody to then borrow or lend against that on HyperEVM protocols. And we expect that to also expand in the near future to RWAs and other forms of tokenized assets. And from our positioning, as we continue to have conversations with institutions, it's very powerful to have, a federally chartered bank supporting a lot of these assets. And our opportunity from the Hyperion side is not only do we have a revenue share with all of our partners across Hyperlend, Risk, Kinetiq, and anything that we build on Hypercore as well, but we also have a token or equity exposure to our partner protocols. And so it's a way of designing not just robust infrastructure that can be geared towards retail or institutional users, but something that does scale with the growth of HyperEVM and Hyperliquid. And so that's been our positioning and something that we want to continue to focus on with the right kind of partners.
Yeah, I think that's super important, not only being able to have these integrations out of regulated institutions to be able to do things like borrow lend out of qualified custody, but that I think speaks volume into the advancements of institutional access for DeFi. And it's something that we're seeing across the bank, whether that's, integrating into borrow lend protocols or allowing clients to be able to allocate the vaults. Ryan, I know you guys have been doing some vault curation management. What is your general thoughts on that?
General thoughts are absolutely. I know that vaults is somewhere that we spend a lot of time over the past few months at Bitwise. We've really moved into both an off-chain or traditional asset manager offering crypto exposure to an on-chain asset manager involved in everything from staking to tokenized funds to vaults themselves. Wouldn't be surprised to see Bitwise curated vaults on Hyperliquid in the near future. One thing I think that's increasingly important as we talk to allocators and investors around vaults is that they have the same regulatory protections around investments in vaults as they would in ETFs or other, money market funds or other strategies. And so as a RIA offering vault curation, we're I think the only one doing that. So, excited at some point to hopefully bring that to Hyperliquid and just allow this funnel of institutional capital to continue to make its way or bring capital into the Hyperliquid ecosystem. And what I love so much about a lot of this conversation is you just hear all of these different ways that Hyperliquid and the businesses around it are growing and are kind of self-fulfilling into this flywheel. Like one, Hyperliquid at its core is this decentralized infrastructure that you have liquid staking solutions built on top of, funds running on top of. You have, publicly traded companies building products on top of. You have HIP3, HIP4, you have Vault. Like all of these things bring capital into the ecosystem, generate more revenue, of course, for the companies that run these things, but also for the Hyperliquid ecosystem, which then buys the Hype token, which accrues value to Hype investors. This is the type of flywheel that I think 10 years ago or 5 years ago, crypto enthusiasts and probably all of us on this call dreamed about. And it's actually here, and it's at very, very early stages. And so I'm really excited to see how big this will grow. And you can already see several other networks and protocols mimicking this type of structure. And I think that's a sign that you found product market fit and you're onto something really, really great. So, to answer your question directly, I believe that we will curate vaults in a regulated manner on top of Hyperliquid in the future. But I think all of this activity being built on Hyperliquid should leave us feeling incredibly bullish, particularly that this has all been happening and all this excitement's been happening and positive price action and positive developments been happening in Hyperliquid while the rest of the market is down 30, 40, 50% in a deep crypto winter. This is the type of stuff that ends up, unleashing like a coiled spring once sentiment turns around for the broader crypto market. And I think that Hyperliquid is very well set up for that to happen.
100% agree. And I also love the fact that all of the firms here represented in this panel are leveraging Anchorage's infrastructure to allow them to be able to do that. You guys are phenomenal clients, and I really appreciate your partnership along the way. I know we've been experiencing a little bit of some sound issues, and so just go ahead and close things up here. To wrap it up, Hyperliquid continues to be one of the most exciting themes here in the space and touches everything from perps to RWA to institutional DeFi and more. And we're really proud to partner with all of you across this and across our product suite. Big thank you guys to joining. Big thank you to all of the amazing guests who listened to the live stream here today. And once again, apologies for a little bit of the audio issues. I really think there's only one way to properly end this Hyperliquid stream, and that's with a Hyperliquid. Thanks, guys.
Thank you.
Thanks, guys.
Thanks, everybody.